Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Shortly speaking, on the gold market, in fact, all that we could do right now is just to wait of the results. Well, maybe the Fed meeting will be some factor that could push market in one or other direction. Currently, it mostly seems that market have the dovish expectation on the results of the Fed. We just have talked on the euro currency. There are also markets forming, showing some behavior that points on mostly positive expectation for the euro, some weakness of the dollar, and it probably means that mostly investors expect the dovish comments from the Fed from the perspective of the rate hiking. So it's not necessary that there will be some drastic changes in the Fed policy, that the rate will change or something of that sort, but mostly it has a relation to the comments that should follow on the Fed meeting. So there is just one moment that today I have read an analysis opinion that points on some possible hawkish results of this meeting, is that the yield of the short-term United States Treasury bonds, United States Treasury notes, have risen. So usually the yield is rising when the market expects the rate hiking. But currently on the behavior of the markets, I do not see the confirmation of this, not the rate hike, but that market expects the hawkish comments. So on the gold market, guys, we also see something of that sort, especially, as I said, there was this some kind of the surfing above the neckline. This is not absolutely normal for head and shoulders pattern. For the head and shoulders, is typical especially when the right shoulder is forming, the bears should control the market. When the bears control the market, they push market lower. But we do not see anything of that sort on the right shoulder, and this keeps overall situation in decision. It keeps market in tighten. So as I said, as bearish signs that has been formed recently, as bullish signs and patterns that has been formed, all of them have just partial success. So yesterday we have talked about it. So uncompleted free drive has led to this upward bounce. Later market has formed the grabber, and market indeed has returned back down, take the top, and that was the moderate success of the bullish signs that we have in the second part of the head and shoulders. But all these patterns haven't led us to failure of this head and shoulders pattern. Market hasn't formed, hasn't moved above the top, wasn't been able to close above it and stands above this top. So just grab the stops above the top of the shoulder and drop lower, and return back the concern what really action will follow, whether head and shoulders will be completed or market will take some another action. As market has started to drop, we start to think that probably market really has chance to continue move lower, but then it suddenly stopped right just a few bucks above the neckline, and the standing above the neckline also looks like there's some kind of the I don't know, it's bullish sign. So because this is absolutely something outstanding for head and shoulders pattern, when the market just holds above the neckline. So this is, some sort of the Wingardium Leviosa is in a Harry Potter film. So this market just fly above the neckline. So it's absolutely outstanding moment. So what we have in the recent sessions. In recent sessions, you can see this grabber that has been formed recently has failed since market continue move higher, and this is minor micro bullish dynamic pressure since market has trend shift bearish, but price action was standing to the upside, and right now market shift trend again above to the bullish. And in general, guys, this action reminds some kind of the pennant pattern that is forming here, some triangle, and it's better to look for it on the 4-hour time frame chart. So it's something of that sort, guys, is forming here, as you can see, and by itself the triangle is the continuation pattern. So that's why we still do not want to refuse an idea of the possible upward continuation here. The first up, consolidation in the triangle shape, and upward breakout. That's easily could happen. That's why this in fact was the major reason why we call you to not take the position inside of this triangle, to not take the position before the final confirmation will happen or before market will reach some significant level. For example, if the hand shoulders will work and market drop lower, wait for 1190, at least at this level where we start to think about the taking long. If 1190 will not survive, we will wait for another level around 1150 maybe, or something of that sort. So in this case, when we will get direction, we easily could start to search the levels. If market will lead to the failure of these head and shoulders, and if suddenly it will break this triangle to the upside and hold above this top, not just grab the stops as was here, but in reality will hold above it, this will be the sign of the failure of this construction, and it means that market stands on upward continuation. In this case, we also will take the position but into the long side of the market. Currently, guys, this moment mostly points on bullish side. So this behavior is not normal, as I said, for the hand shoulders pattern. So that's why it makes me think that this is some kind of the hidden signs of dovish expectation from the Fed. Maybe Fed results will be precisely the moment, precisely the factor that will be able to push market to move it from the dead point in one or other direction. So it will become the catalyst of the possible action. And currently, this behavior mostly points on the dovish expectation from the Fed, and that market is ready to continue move higher. The same we see right now on the euro currency. On the 4-hour time frame chart, guys, we see this triangle again, and take a look. Market has moved above the weekly pivot point. This just currently is minor action, but still it stands above it, and this is also some minor bullish sign. So let's see what we will get, because guys, for us there's no necessity trying to take position right now. It absolutely we do not need it, because it carries very significant risk for us. It would be much better when we will try to take the position on the retracement after we will get the clear direction. Because if we will get the direction, this will not be some minor action where we need to hurry to take the position because we just could miss it. If we will get the direction, this direction will be probably medium term, and it will carry significant distance, and it will be quite easy to try to take the position on some minor retracement within this direction. That's why, and this will be just significantly safer than right now. So that's why we mostly call you to wait for results of the Fed meeting, to see what will happen, and if we will get the clear direction, we will follow it.